Cathie would make shocking stock prediction for Tesla that has the whole market in a frenzy. We'll also be telling you about some stocks we're interested in and would love your feedback in the comments below. So if you hold any Tesla stock or plan on investing in the near future, you need to watch this full video. Hello everyone, you're watching Trade Daily. Like and subscribe to get all the latest news on Tesla and Tesla stocks. Now let's get into the news. We'll start this off by looking at Tesla's stock price. Today, a share of Tesla stock is trading at $196 per share, down 5% at the time of recording. These high-powered growth stocks could turbocharge your investment returns. Cathie Wood is back to her winning ways. Wood's flagship fund, ARK Innovation ETF, is up nearly 30% so far in 2023, handily outpacing the Nasdaq Composite and S&P 500 indexes. Here are two of Wood's favorite stocks that are helping to drive ARK returns. Both are intriguing long-term investments for you to consider buying today. First up on Cathie's Christmas list, Roku is one of ARK Innovation's largest positions. The streaming leader accounts for nearly 7% of the ETF investment portfolio, and its stock price is up more than 40% so far this year. Roku aggregates streaming services on one convenient platform. People viewed over 87 billion hours of content on Roku in 2022, a total up 19% from the prior year. Advertising dollars follow eyeballs, so they're increasingly flowing to Roku's ad network. New partnerships with streaming providers such as the one Roku recently struck with Warner Bros. Discovery are bringing more popular shows to its platform. More content means more streaming hours viewed and more ad spots that Roku can sell to marketers. Roku also announced the launch of its own line of TV last month. The company is integrating its popular streaming software with innovative hardware features to create an affordable, top-notch user experience. These new smart TVs should help to expand Roku's market share. In their Big Ideas 2023 report, ARK researchers noted that approximately 85% of U.S. households have at least one internet-connected TV, but the ad market for connected TV is less than a quarter of the size of total U.S. TV ad spending. Cathie Wood and her team expect this gap to close as providers of streaming ad solutions steadily wrestle market share away from traditional TV marketers in the coming years. Roku CEO Anthony Wood is even more bullish on the industry's long-term prospects. "The world is moving to streaming," he said during an interview with CNBC in January. "All TV is going to be streamed. That means all TV advertising is going to be streamed." Roku stands to benefit from this megatrend more than perhaps any other company, which makes it a great stock to buy today. The next pick is a personal favorite of Trade Daily. Can you pause the video and guess in the comments down below? Well, pin the first user to get it correctly. And don't cheat because, well, no. Anyways, the second pick for today is Tesla is ARK Innovation's biggest holding. The electric vehicle leader accounts for more than 10% of the fund's portfolio. It's also a major driver of ARK's impressive gains in 2023. Tesla's stock price is up a stunning 63% so far this year. Wood is an ardent Tesla bull. She's also adamant about the jaw-dropping growth potential of the electric vehicle market. ARK Analysts project that EV sales will soar more than sevenfold to 60 million units by 2027, fueled by falling battery costs and, in turn, lower vehicle prices. Wood is also intrigued by Tesla's artificial intelligence and data analytics capabilities. With its vast pool of real-world driving data, Tesla has an opportunity to create a leading autonomous taxi platform, according to Wood. ARK's research team believes autonomous ride-hailing services could eventually become a massive $11 trillion market. If ARK is even remotely accurate with these grand predictions, Tesla has a huge runway for growth still ahead. The EV Titan's revenue surged 51% to $81.5 billion in 2022, while its net income soared 128% to $12.6 billion. Tesla expects to produce 1.8 million EV in 2023, up from 1.3 million last year. Yet despite this rapid pace of expansion, Tesla's sales still represent just a small fraction of what Wood believes they can reach in the coming years. Buy shares today, and you can position yourself to profit alongside ARK as the EV leader works to fulfill its terrific growth potential. Cathie Wood makes an eye-opening prediction for Tesla. Her ARK funds have snagged 806,663 Tesla shares in January alone, recently valued at $105.4 million. Famed investor Cathie Wood, chief executive of ARK Investment Management, is a true believer when it comes to electric vehicle titan Tesla and its founder Elon Musk. ARK funds have gobbled up 806,663 Tesla shares in January alone, recently valued at $105.4 million. Tesla is the No. 3 holding in her flagship ARK Innovation ETF, behind No. 1 Exact Sciences and Zoom Video Communications. Tesla shares have plunged 58% during the last year amid worries about production and demand issues. Investors also aren't too thrilled with chief executive Elon Musk's preoccupation with his newly bought Twitter. But Wood sees big gains ahead for the stock. Just from electric vehicles, there could be almost a five-fold increase in this stock during the next 5 years, she said in a webinar cited by CNBC, and if you believe in autonomous cars at all, it's closer to 13 times during the next 5 years. So we are as bullish about Tesla as we have ever been. 5 times the recent price would be $653, and 13 times would be $1,699. The company has implemented big global price cuts, and Wood thinks that's a smart strategy. Tesla is going to be very aggressive in pricing, she said. Tesla can afford to do this. It's got the lowest cost structure and is innovating the most aggressively. The other auto manufacturers will have to follow these price declines, but it will hurt them from a margin and profitability point of view quite significantly. Meanwhile, Wood's investment performance hasn't exactly overwhelmed the financial world over the past year, as her young technology stocks have slumped. ARK Innovation ETF has slid 53% during that period and 78% from its February 2021 peak. Wood has defended her strategy by noting that she has a 5-year investment horizon, but the 5-year annualized return of ARK Innovation was negative 1.48% through Jan 19, compared with the S&P 500's positive return of 8.67%. The fund's performance also doesn't come close to Wood's goal for annualized returns of 15% over 5-year periods. ARK Innovation's subpar returns may finally be starting to push investors away. The $6.6 billion fund registered a net investment outflow of $382 million in the past month, according to ETF research firm VettaFi, but it still notched a $1.59 billion inflow over the past year. Tesla isn't the only EV maker with a power and energy business. Shares of Chinese electric vehicle EV maker NIO dropped as much as 4% Friday morning, extending what has become a nearly 2-week decline. While it gained some of today's losses back, NIO's American depository shares were still down by 2.6% as of 11:35 a.m. The decline started when the company reported its January delivery data. But NIO also just announced some positive news that highlighted the company's strategy of becoming more than just a seller of electric cars. Like sector leader Tesla, NIO has a burgeoning energy business, and it just released an update regarding those services. NIO has differentiated itself from other global EV makers with a battery-as-a-service (BaaS) option that allows customers to lower the upfront cost of NIO's vehicles and instead pay a subscription to use NIO's power swap station network. Now the company is trying to grow its business in Europe by leveraging that power products and solutions segment. NIO accelerated its vehicle shipments to Europe last year to grow into several European countries. But NIO said this week that it also has joined the European Union's Horizon Europe research program. That program will provide the company funding to expand research and development of energy storage systems. NIO will leverage its battery swap stations to additionally offer power grid services to make energy systems more resilient, reliable, and efficient. The company's European business will take time to expand, however. Investors today are rather focused on more short-term news, such as NIO's struggle to deliver vehicles in January. After 2 consecutive months of record deliveries, the company delivered the lowest number of EV last month since May 2022. And with that, ladies and gentlemen, we've come to the end of the news. Like and subscribe to stay up to date with all the Tesla news. But just before we go, I'd like to remind you that this video is for news and entertainment only and should not be used as investment advice.